Hi there, this is Dinah Sescalini, and this is a video for the closing process. And this is actually for any one of my accounting classes. This is actually the 15th edition textbook. The other videos were the 14th edition textbook, so I'm updating it because they've made some changes on this. So hold on one second, my little PowerPoint. So we're going to talk about permanent accounts. Permanent accounts or real accounts are basically any account that is on a balance sheet. So the balance sheet accounts are ones that don't close, just so you know. Okay, balance sheet accounts don't close. So cash, accounts receivable, accounts payable, capital, these are all balance sheet accounts. We're going to talk about how to know the difference between the two. So those are permanent accounts. Temporary accounts are the ones that will be closing. Temporary accounts are anything that's not on a balance sheet. So that kind of includes revenue, expenses, dividends. All of these, oops, sorry guys, sorry about that. All of these are called temporary accounts, and they will not be on any balance sheet, and they will be closed. And when I say close the account, it means that I zero it out so that at the end of the accounting period, as I move into the next period, whether it's a month or a year, whatever, they're going to start open with new accounts. I'm sorry, start over with a zero balance. Sorry about that. Okay, so this is called closing entries. It's the closing process, and typically we hear people say, I'm closing my books, and that's what's happening here. So they will have zero balances when I do close them. They're very easy. There are only 2 journal entries. The previous edition of the 14th edition had 4 journal entries. So now I've only got 2 journal entries to deal with. Very easy. I'm sure that you can get this. Okay, so 2 journal entries. So the first step is I'm going to take my revenue and expense account balances, and I'm going to transfer them to what I call the retained earnings account. And we'll talk about this in a minute. I'll actually show you how this is going to happen. So revenues normally have a credit balance, so I would debit it for the same amount. Expenses normally have a debit balance, so I would credit it. So the first journal entry is to take the revenue and expenses and transfer them to the retained earnings account. The second journal entry is to take the dividends and transfer it to the retained earnings account. 2 journal entries only. You guys got this, okay? You totally got this. So here's what's going to happen. In the first journal entry, every revenue account will be debited, because if you go back to my rules of debit and credit, revenue is always only credited. So I'm going to debit each revenue account. I will credit each expense account, and then I'll determine the net income or the net loss. A net loss happens when I spend more than I make, or I have more expenses than my revenue. If I have a net income, it means I spent less than I made. So if I have a net income, then I'm going to credit to retain earnings, but if it's a net loss, it will be debited. And I'll show you this on the very next screen. Second journal entry, I'm going to debit the retained earnings for whatever the balance is in the dividend account, and then I'll credit the dividends for that amount. So 2 journal entries. Here's what they look like. Let me make it a little bigger for you if you guys don't mind. You know, I think I won't be able to. So here are my revenue accounts. Here are my expense accounts. Here are my dividends. This is just a little holding block I want to. So my balances in my revenues are always credited because that was on the balance, that was on the debit rules and credit. So I'm going to debit for these 2 amounts to here. Now this will end up being 0. So there's my total revenues. Over here on the expense accounts, they're all normally a debit balance. Well, I'm going to credit them, and I'm going to add them all up, and they equal $9,855. When I subtract that, I have a net income of $71.05. So first journal entry will be the debit to the revenue, the credit to all the expenses, and then based upon the net income, credit retained earnings. Okay, just let me move forward. Here's what it looks like. So here's my debit to my revenues. Here are my credits to my expenses. And remember, I told you never credit an expense till I change the rules, and I'm doing that now. And then the net income is credited to my retained earnings. So here's journal entry number 1. Let's go back. Journal entry number 2. I'm going to debit retained earnings for the amount of the dividends, and I'm going to credit dividends. So this will make this 0. All of these accounts will have no balance, and these will have no balance. So here is step number 2. Retained earnings debited, dividends credited. Okay, so this ends video number 4. I think it's video number 4 for the closing process. I'm sorry, it is video number 3, the closing entries. So this is chapter 4, my 15th edition, closing entries, the end of video number 3.